just power it up. Okay. Hello, everybody. How's everyone doing?
Good, Ethan.
Oh,
It's been quite some
all
time.
right. Yeah, it's been quite some time since we've done our last webinar.
Yes.
Okay. Hope everyone here tuning in had had a great day, right? So do pay attention to the two gentlemen here, Adrian and Bruce, who will be giving us a very insightful webinar on two regions, India and Southeast Asia. Let me just share my screen right now. Okay. All right, can you guys see? All right, cool. Okay, let's just wait 1 minute before we start it proper. Okay, let me just do this. Okay, 1 minute, 1 minute. Okay, guys, of course, thank you for joining us today. A wonderful evening, right? So today's webinar topic is towards a sea of opportunities, right? So this webinar will be roughly an hour, right? So let me introduce you to two of our guests first. Mr. Adrian Chu, Senior Vice President at CSOP Asset Management, right? And we have Bruce Zhang, right? Portfolio Manager, of course, CFA certified from CSOP Asset Management. And myself, of course, I'm Ethan, right? Head of investor platforms for both share investor and investing. Okay, just very quickly, you can view their profiles here. Adrian and Bruce, can you please say hi to the audience?
Sure. Hi, everyone. Thanks for attending tonight's webinar. I'm the PM of the CSOP Asset Management.
And good evening, everyone. My name is Adrian. I'm from CSOP Asset Management, running the sales and marketing team here. Happy to see you guys here. Yep.
Cool. If you have been to a REIT symposium recently, right, you all probably have met this two gentlemen in person. Okay, so disclaimer, right? You can many things you can just take a look. So let's start the webinar proper, right? Like I said earlier, webinar will be focused on two aspects, India and Southeast Asia, right? So as the moderator today, I've got a few couple of questions which I'll be asking you guys, right? So the first question, right? So we all know that Southeast Asia and India have been identified as one of the fastest growing regions globally, right? What factors contributed to this growth, particularly in the context of booming internet industry and the rise of tech unicorn companies, right?
Sure.
Bruce, can I get your help?
Yeah, sure. If you move to slide 6, just as you said, as global investors and corporations look for growth, so everyone is wondering where is the next China? And some says ASEAN should be the supply chain of the world, so the new China could be ASEAN. Well, some says India may have the fastest growth rate in the coming years, as it is expected to have the greatest transformation as compared to other countries in the world. So India could be the next China. Therefore, we seek for the opportunities in Southeast Asia and India due to the continuing capital inflows into the two regions. And thanks to these inflows on page 7, next slide, we have been witnessing startup booms or the unicorns in SEA since around 10 years ago. And in 2014, there were only 2 names, say one is Grab and the other one is VNG, the Vietnamese company focusing on the online games. But now, or in 2021, there were already 46. And on page 8, the global tech giants, next slide, also eye on the regions are unicorns, investing in firms such as Grab and Imtech or Gojek. So those global giants may not only act as investors, but also want to replicate their success in the region through their models. And these moves are also echoed by the strong FDI inflows on page 9, the next slide. For example, in 2021, the FDI in Southeast Asia rose by 42% to US dollar 174 billion. It's the pre-pandemic record. And ASEAN remained a top recipient of FDI in emerging regions and continued to be a growth engine. So the strong inflows pushed the FDI stock in the region up to US dollar 3.1 trillion, an increase of 72% from 2015. And next slide on page 10, the VC and PE investment also grow rapidly and dominated by the technology investment in both India and Southeast Asia.
Awesome. So I think earlier on, when you showed the timeline of the startups, right? Wow, Grab has been in the market for 10 years. Wow, time flies. And also I saw One Championship as well, 2018. Wow, actually One Championship is one of the leading sports channels in Southeast Asia, at least, or in Asia. Right. So the next question I have, right, is in terms of market cycles, right, where is India and Southeast Asia right now?
Sure. I'll try to answer these questions in two perspectives. One is a macro perspective, because as shown here, the combined GDP of SEA, Southeast Asia, plus India already surpassed Japan since 6 years ago, and making the region the world's third largest economy, just next to the US and China. And the macro growth speed in India is also expected to outpace China, with its GDP more than doubling from US dollar 3.4 trillion to US dollar 8.5 trillion to become the world's third largest economy by 2027. And even specific to 2023, despite a potential slower growth across the globe, Southeast Asia and India are expected to grow at a faster pace. And from an equity market perspective, if 2021 is a year for so-called the gross merchant volume growth for the region's internet leaders, and 2022 is more about profitability, then obviously this year it's a balance between the GMV and profitability. And on a positive note, the region's leading tech names have dominant market shares, which could help them better positioned if the fundamental improves with less foreign exchange fluctuations in the second half. And in terms of the region's semiconductor place, the AI-driven themes should be a driver in the near term, and followed by the consumption-driven triggers. And moving to next slide, the historical return also indicates that the region's tech names still have some rooms to rise. And as of March this year, the tax index here, the edge Southeast Asia Plus Tech Index gained nearly 45% per annum over the past 3 years, with Sharpe ratio over 1.6. And over longer time horizon, over the past 5 years, the index annualized return is more than 14% per annum, with the Sharpe ratio exceeding 0.5. And as shown on the left, the chart left-hand side, its performance is roughly in line with the Nasdaq 100 index, and significantly outperform a more generic MSCI emerging market index during the same period. However, if we combine the recent declines in April and May this year, the current drawdown level of the tech index, the Southeast Asia Tech Index, is around negative 25%, which is quite close to the historical drawdown, typically at 30 to 40%, and the negative 40 is mainly due to the outbreak of COVID. So the current drawdown level is quite close to the historical low level. So this may imply that the tech names or the region's tech names has more upside potential than downside risk if the fundamental continues to improve.
Thanks for sharing, Bruce. Right, so the next question I have for you is, how do you foresee the impact of the relocation of the global industrial chain on the development of high-end manufacturing and electronic technology in Southeast Asia and India, because we know that some big names like Apple, they're actually diversifying and opening up factories and stores in India as well.
Yeah, it's actually happening, or has been happening since a couple of years ago, and we do
Wow.
believe, the current global industrial relocation to Southeast Asia and India represents the fifth industrial transfer over the past 170 years, because the first round starting from the UK to US, starting from 1850 till roughly till the World War II, and the second wave obviously from the US to Japan. The period is between 1950 to 1970. And the third wave, everyone very familiar with, from Japan to the four Asian tigers, 1980s, 1990s. And the last wave is from the four Asian tigers to China, and it happens the first 20 years this century. And now, obviously, it's the ASEAN and India's turn to capture these opportunities for these the fifth wave. And in fact, on page 16, the next slide, just like you said, the global corporation like Apple and Samsung, they have such a relocation, or even as early as 2006. But the most recent move, for example, Apple, is also to shake up the international sales operations to make India its own region. And Apple's next MacBook production center is likely in Thailand. And in the meantime, Samsung is building the US dollar 1.3 billion worth EV battery plant in Malaysia. So these moves are actually happening, for a while. And this, the result or the impact is that it's not surprising on page 17 to see a surge in the exports led by the high-tech sectors in the region. And these process may also trigger some more unicorns in the region.
Wow. Take a look at the data.
Yeah.
Electrical machinery and equipment, 490 billion. Wow, they have nuclear reactors as well.
A little bit, yeah.
Yeah. Okay. The next question is, with the expanding middle class, urbanization, and increasing income levels, how are internet services and digital consumption demands evolving in Southeast Asia and India? Because right now we're at the age where, Grab, handphones, apps, e-commerce apps like Shopee, they are, I mean, in any place you go, you probably will see them, even locals using it, of course, the localized version. So, with this, Bruce, can you shed more light?
Yeah, I think all of this is, we call them the internet adoption, but it's obviously on the back of a favorable demographics, and also on the back of a fast economic expansion. And one direct result of a fast macro expansion is that the rising income and rising middle class. And except Singapore, actually the urbanization rate among Southeast Asia plus India still has plenty of room to improve, and GDP per capita across ASEAN will grow by 4% per annum, and ASEAN's middle class is exploding to the point that it will include nearly 70% of the region's total population by 2030, and contributing 140 million new consumers, representing 1/6 of the world's new consumer class. So perhaps the next popular movie is not Crazy Rich Asians, but Crazy Rich Southeast Asians or Crazy Rich South Asians. And we'll see more and more of these people in Singapore. And another trend, on page 20, next slide, is just as I said, it's the huge and fast-growing internet users here, and particularly due to the large young population, which provides a potential client base for development of a digital economy in India and the SEA leading economies, namely the Singapore, Malaysia, Thailand, Vietnam, and Indonesia. So for those countries, their internet sector, on next slides, are expected to register double-digit growth in the next 3 years. And all of this would generate a great demand for internet services on page 22, leading to an internet industry blooming in the region, such as e-commerce, online travel, online media, ride-hailing, and food delivery and fintech. So just as you said, there are a lot of local versions of the global tech giants. But this is not all of the story, because on next slide, There is also global IT demand being outsourced to India, Vietnam, and Philippines. And taking India as an example, more than 500 companies in India are offering the outsourcing services to over 66 countries. And 50% of the Fortune 500 firms, they outsource their IT development to India alone.
Wow, this is amazing. Yeah. So earlier you said 2030, right? I know the year is 2030. It's supposed to outpace other regions. And you realize we're actually closer to 2030 than we are closer to 2015, right? We're just 7 years away. Wow,
Yeah,
time flies.
we're almost there. Yeah, time flies. And
Yeah. All right, the next question, right? So what are some of the notable success stories among tech firms in Southeast Asia and India? Can you shed some light on the factors that have contributed to their success?
Sure. Actually, not the region already has its own version of global tech giants. So to name a few, SEA Ltd, everyone very familiar with. It was initially a mobile game developer, but now more on the e-commerce business. And its market share remains very stable recently, despite the headwinds in growth due to the recent FX fluctuations. And we believe the company may be better positioned if there is an increase in demand aimed at macroeconomic recovery and the foreign FX rebound. And also Grab, one of the largest super apps in the region, even back to 2018, the Grab already expanded into the food delivery after acquiring the Uber's ASEAN business. And for now, it has around 130 million monthly active users and over 4 million merchants in over 400 cities and 8 countries. And it also has a fintech business, including the GrabFin and Digibank. And the other one is the Indian one, the Infosys, Indian technology firm, IT consulting, technology services, and outsourcing services, as mentioned. This obviously founded in India, but 40 years ago. And now it also the first Indian IT company listed on Nasdaq back to maybe 24 years ago. And Infosys recently also recorded revenue, the compound growth rate of 10% during the most recent 4 years, primarily driven by the headcount growth. And on next slide, page 26 lists the top 10 holdings that our ETF's benchmark has as end of March this year. In addition to those largest names, the ETF also includes some names with a unique advantage in some niche markets. For example, the Bachelor Pack, hopefully I pronounce my spelling and pronunciation is correct. It was founded in 2010 as an e-commerce marketplace and headquartered in Indonesia. And in 2016, the Bachelor Pack launched the Mitra, the convenience stores for the so-called O2O business. And today, there are over 120 million users on its marketplace and over 16 million middle to small merchants all around the country on the Mitra app, and allowing the company to generate over 75% of the transacting value from outside the so-called tier 1 cities in Indonesia. So that's which means that our index or our portfolio not only includes some leading names, leading tech names in the region, but also have some rising stars in the region. And in short, as shown on the right-hand side, the stock links to internet adoption or the demand-driven themes in green, and the securities relevant to the industrial train relocation themes in the how to say, the orange color, almost split our investment universe, or the half in our portfolio's index.
Wow. So I see some familiar names. SEA, of course. Grab Venture is inside, and along with Cycle and Carriage. Wow.
Yeah, high-end manufacturing also links to a technology themes, and data electronics. The number one stock in terms of market cap in Thailand also links to some AI usage because they can provide some the upstream supply.
Wow, interesting. Right. So the next question, what are the key regulatory and policy considerations that investors should be aware of when exploring investment opportunities in Southeast Asia and India? Maybe Adrian, you want to shed some light on this?
Yes, I think Ethan, thank you for the kind question. Yep. So I think we need to know that Southeast Asia is still an emerging market, and most of the time emerging markets are driven by government policies. And right now, I think Bruce has did mention about the favorable demographics of the young population and everything. It's actually just the natural ingredient for the governments around this region to actually to harvest them, to actually get them to go into work, right? And we found that with high inflation globally, with very high global costs from um, other regions besides Southeast Asia and India, and supply chain disruption, due to the disparity between who reopens earlier. So we know that China has actually reopened far later than the rest of the world. That caused supply chain disruption as well. That's due to COVID-19, and this have driven international businesses to actually move their resources, their supply chain, from this disruption, to filter them. I mean, to protect their business of this disruption, right? To move their resources to Southeast Asia and India itself. And Bruce did mention, we call this movement as the industrial relocation, or the transfer of the industrial era into Southeast Asia. This is our time to shine going forward. And governments around these regions understand the opportunity, and saw the opportunity, and like you did mention, they start to actually have introduced more policies to support to attract businesses to come in, and getting their workforce to be employed, and to flourish, and then cause a virtuous cycle where the middle class will start to boom again. Right. So some examples like Singapore, took advantage and then start to introduce tax incentive, to introduce special funds, just to encourage startup, right? And you could see that, over the last few years, chip makers, global chip makers actually plowed to at least $200 billion into Singapore, just to produce high-end chips, wafers, semiconductors as well, right? Thailand also did not follow suit as well. They start to introduce also it's tax incentive, just for local investors and foreign investors into advanced electronic manufacturing. You could see that some of our fridge and washing machine, even some of the cars like Toyotas, are being manufactured in Thailand already. And Thailand is currently ranked 13 globally when it comes to manufacturing electronic products and stuff like that, right? So on the whole spectrum, in terms of the semiconductor industry, right? Southeast Asia account 27% of this whole what you call it, the semiconductor industrial sector, right? And Malaysia alone itself covers 50% of this manufacturing. It covers from packaging and testing, providing a testing market for these semiconductors. So Malaysia is also playing a huge part in terms of this booming semiconductor industry investments itself. Last but not least, a sleeping giant had just woken up recently. The most populous nation, India itself, benefited from, I would say, the US-China tension itself. You could see Apple, have did a reshuffling in terms of management, and say that, hey, I want to focus on India more, and Southcom is actually a third-party manufacturing for Apple. Is actually looking to double its workforce just to cater for the reshuffle, the relocation of Apple to move their supply chain here. So I think with a lot of policy support, I think we are in a bright spot where we could see that Southeast Asia and India going forward. Yep.
Thank you, Adrian,
Yes.
for sharing. So I think we have a lot of high hopes for the region. Right? Of course, I think in Singapore, even though we probably still be deemed as a developing country, but I think we are in good position. But of course, we are looking at all the other gems that have even more potential than us. I maybe I shouldn't say this, but those are some of the facts, right?
Yeah, gems are emerging, right?
Yeah.
Yes.
So okay, the next question is, compared to other global tech hubs, what advantages do actually Southeast Asia and India offer to investors? Right.
Yep. So I think again, the natural ingredient for any country to blossom and to strive is actually the demographics that each of the countries have. And if you look at the four reasons here why Southeast Asia, India is poised for next run up to be the leading economic contributor going forward is actually one, in terms of total population. If you compare Southeast Asia and India itself, right, we have a larger population compared to China. And then two, when it comes to the working population compared to China itself, we are much larger than China itself. We are ready to take over, the factory of the world in this part of the world, right? And those in the workforce, the median age right now is actually 10 years younger than Chinese. There's looking at the median age for Southeast Asia and India, right? They are actually below 30s. Well, if you look at the median age for China itself, is very close to 40 years old. So we are actually at 10 years younger in terms of workforce available right now. And in terms of labor costs, surprisingly, we are definitely lower than China itself. So it makes us a very cost efficient kind of labor force. So these are the four main reasons. And I think the reason, the advantage, the most important essential advantage that we have is actually the natural ingredients that we have is actually we have a very strong and large workforce itself. And I think with the huge population and of course the favorable policies itself that the governments are introducing, will definitely provide more opportunity for the newer workforce, rising, blooming middle class, and then continue to have this virtuous cycle using technology, and then growth will be around the region here.
Yeah, this is actually surprising because I think I personally thought without China would be actually having a growing birth rate, but I mean the data seems otherwise, right? I think this is one of the if you have businesses and you need to have people to work a healthy workforce, you probably need to have younger people as well.
That's right.
Yeah, this makes sense actually.
Yep.
Right.
Yep.
So yeah.
Yep. I was talking about this just now, about this is the second, the policies, the government policies to provide. Yep.
Yeah, interesting.
Yep.
Next, Adrian, I would like to ask you, how can investors actually effectively navigate and capitalize on this potential of emerging Asian markets, right? Are there any specific strategies or considerations they should keep in mind when you want to, go into this market?
Yes. So I think right now we have to acknowledge that, tech stocks are considered as growth stocks. And I think, growth stocks tend to be a bit more volatile versus a value kind of stocks itself. And I think the best way to access, to such a growing market, yet, to try to reduce the volatility within a portfolio, I think the best method is to actually an ETF or exchange traded fund format itself. And that's the reason why we brainstorming came out this idea that, hey, why don't we found that, we do have a Hang Seng Tech ETF in the market, right? And that's where, that's actually for the Chinese technology, the Chinese soft techs, consumed by the Chinese population, right? We have the Nasdaqs, they're actually more for the Western country, and we realized that, hey, there could be a missing block in our investment portfolio building ingredient, and that's actually an ETF that tracks both Southeast Asia and India itself, and that's the reason we came up with a CSOP IH Southeast Asia Plus stands for the India Tech Index ETF itself. Now, through this ETF, they'll be traded on the Singapore Exchange with two ticker. SQU is actually a US denominated ticker where you can, if you have any US dollars lying around, you want to invest into this ETF, you can actually use your US dollars and buy into SQU. But if you have a Sing dollars right now, you can actually trade through a ticker called SQQ for Sing dollars denominated. But rest assured that these both tickers, they are fungible, which means that let's say if you invest into SQU and if you have Sing dollars needs going forward, you can actually liquidate and divest through SQQ and get Sing dollars back. So they are both fungible, vice versa, right? So the trading lot size for Singapore Exchange is actually 1 share, minimum 1 share, but definitely you have to go more than 1 share. So probably have to go to 1,000 based on some of the commissions, which is actually some of the investment costs that you need to consider as an investor itself. We price our share as $1 per share, Sing dollars, $1 per share. And it will start trading on the 20th of June next week. Oh, sorry, the following week, yes. Now, you did mention about investment strategy, and we are using a passive management with a representative sampling strategy. Now, that's a very huge jargon, but to simply put, we are doing a physical replication. All the underlying are actually the underlying stocks itself. We do not go into swaps or derivatives. We are back. This ETF is actually backed by the stocks itself, right? And the management fees for this ETF is actually at 0.99 per annum. The next slide, please. Yes. Right. And all ETF have to track an index itself. And we want to share more why this index makes sense to us and should make sense to all investors, is that we are collaborating with IH, which is actually an index arm of Singapore Exchange. And with our collaboration with them, we actually come up with this index. IH Southeast Asia Plus Tech Index ETF is a total return index right now, right? It aims to track the performance of largest 30 technology stocks domiciled in Southeast Asia and emerging market, in this case, India. So countries eligible to be included into this index are India, Singapore, Indonesia, Thailand, Vietnam, Malaysia itself, right? So as you say, tech index, right? So the tech, it's supposed to track technology companies that does, business services, consumer retail, vehicles such as, the EV cars, semiconductor, electronic components and manufacturing, food and staples. This will probably be, your e-commerce part. Now, what makes this index methodology make sense? Because we also exclude the the traditional infrastructure such as energy, healthcare, utilities, and telco. We want to, have pure, high technology growth companies within this index itself. Now, once we actually have this universe, and how do we select it? It's actually all these 30 components, 30 companies, right? Within these countries, they must already be generating revenue, right? So they must actually be generating. That means they have actually a product in the market. They're actually having income. It's not a pure startup itself, but it's already having products in the market. They actually have consumer using. It's just that they are still in a very early growth stage, right? And so that means there is a revenue factor to it. And not only that, last but not least, have a liquidity. So they must have some form of liquidity being traded. The underlying must be very liquid. So that is to ensure that the ETF is liquid as well. So this actually would help investors to get in and get out at a much smaller investment cost itself. So this is actually the index methodology, right? So we will take 30 weighted free float market cap kind of stocks to it, and then of course the index is actually priced at US dollars. Just to maximum efficient, that means just to offer maximum diversification, is actually the maximum cap for each stocks is actually capped at 10%. And for country, we want to cap the India to at 50%. We do not want single stock or single country to be too overweight and become a single country or single stock risk. Again, this is actually to provide investors, the maximum diversification benefits that we can offer itself. Now, we also have this very unique selling points, actually the fast entry rule. So any new IPO stocks, any new IPO tech stocks within, Singapore, India, Indonesia, and within Southeast Asia, right? They've gone through a successful IPO, and on its first trading day, the full market cap, right, is actually within the top 10 of all the 30 stocks in the index itself. The next trading day, Bruce, our ETF manager, will have to add in these new latest IPO stocks into the index, right? So as an investors, you're actually passively, investing into the latest tech stocks itself. With this fast entry, you don't have to go and ballot, try to get access and pay through your nose to have this, access to these hot stocks. It is a very hot, very popular IPO stocks. The fast entry rule works for you. So you're passively being exposed to the latest IPO tech stocks within the region itself. And having said that, we rebalance on a quarterly basis in March, June, September, and December, just to keep track of the latest, growing technology companies that have been really generating much better revenue than the existing ones. So we just change out the latest one, and then we actually slowly remove the old ones itself. The next slide, please. Thank you. Right. So in terms of allocations, you can see the sector breakdown. We go into electronic components and manufacturing, and you can see that these are actually some of the sectors that we break in. In terms of listing countries, we have US, Singapore, Indonesia, India as well, and Thailand. Right. In terms of revenue coming from different geographic locations are very diversified, from Japan, Malaysia, Mexico, in fact, Thailand, US, China, even Canada and Vietnam. So it's very diversified, giving you diversifying the volatility and giving you the best maximum exposure to all these growth stocks itself. Next slide, please. Yep.
All right, Adrian, thanks for sharing with us. So I have not taken notice of this IH Southeast Asia Plus index, right? Until you mentioned this, right? So this is really interesting, and I particularly like the fast entry rule because when hot companies, especially when they are in another region, you want a ballot for the IPO, right? It's pretty hard, lah.
Yep.
Let's just face it. And if you're talking about Vietnam or other countries like India, I think it's virtually almost impossible, right? So I think what's the benefit of this is really that as well. And yeah, the Bruce as the portfolio manager has to do the hard work for us, right?
We have a dedicated trading desk to trade these close to the market close for each local markets as well as the US markets.
Yes, that's the benefit of investing in the ETF and under a established asset management firm. In this case, CSOP. Right. So the next question is, Adrian, how can we take action if we're very looking forward to this bright outlook in Southeast Asia?
Yeah, so we have a few key partners actually helping us to distribute this ETF, and you can actually subscribe to iFast FSM1. You just log into your app. You can usually do it at the comfort of home. You can do the same thing as well for Philips Securities. Just log into your computer and log into your Philips laptop, desktop, and then you can actually subscribe using your account as well. Tiger, Futu, Mumu, likewise, you could do an app. DBS Vickers, you can mobile app, you can actually subscribe on the mobile app. Or last but not least, if you want to go and take a walk right now, you can actually use the nearest DBS ATM. You can just subscribe by keying just a simple balloting, just like as a per of the IPO stocks as well.
Nice. So I think these are the few partners that you can subscribe by. I think I've seen Momo and Tiger doing it on their apps as well. Yeah.
Yep.
Okay, cool. So we do have a little bit more of time. I do have quite a number of questions coming in. Wow. So let me take a look at the Q&A.
Got it.
Okay, let me answer this live. Anonymous attendee, sorry I joined late. Is this recorded? How do I answer questions? Okay, you got your answer. You actually put the questions here. This will be recorded and put on our YouTube channel, Investing Note. Just YouTube it, okay? Answer your question. Okay, Mr. Vivek Arora. Right, I'm going to answer this question live. How does the repression against minorities in India affect your bullish thesis on India? I think this one is perhaps
I'm okay because I have to say, first of all, we are not politics experts, but also when we check these countries in the region, I would say every country have a different levels of these kind of political challenges. But back to our ETF or back to our index, when we select stocks, we are not start from the country selection. Of course, when we check the exchange, the tradability, investability, we do check this screen for our potential countries, such as the 5 SEA leading countries plus India. But when we select stocks, we start from their revenue relevance. For example, whether their revenue 40% or 50% is related to the technology. That's the first criterion. And second is more about their market cap, free float market cap, whether they large enough and whether they are liquid enough. I think that's the criteria we have to select the stocks. So even we are not bullish on India as a country, we can still bullish on the Indian leading technology names, and it's also very highly likely that those names also pursue a diversity in the within their corporations.
Yeah, thanks, Bruce, for answering that question. I think, yeah, we're not talking about politics here, and there's a reason why it's called the Southeast Asian Plus Index, and the ETF that replicates this, right? So yeah, you have your question answered. I hope, Vivek. Okay, next question. Valerie Wong. IH is offered in both USD and secondary SGD currency. How will USD fluctuation affect the index price, which is in SGD currency?
Yeah, this
Maybe Adrian, you want to take this? Bruce?
Maybe because we face this similar question when we launch other products tracking both tracking next with more than one currency counters. I think here is that first of all, the index includes local listed stocks and also the US listed stocks, which means they already the underlying currency is already five to six types of currencies. For example, the SGD, MYR, THB, IDR, or USD. So all else equal, if these underlying currencies they appreciate versus the SGD, then for investors are investing in this ETF using SGD, then they will potentially have a FX gain. But if these basket of currencies they tend to go down versus the SGD, then all else equal, then the investors may suffer from some extent of FX loss. But again, it's worth noting that since the underlying investment is growth stocks in the region, I would say the volatility of the stock price is a main driver as compared to the FX fluctuations. So the potential capital gain is still mainly driven by the stock price instead of the FX. But of course, if the macro picture looks promising for those countries, then obviously investor, in addition to the capital gain, they can enjoy a potential FX gain in the long term.
Hope Valerie, Bruce answered your question. Okay, let's move on to the next question. Anonymous attendee, right? How can US investors invest in this? Yeah, Adrian or Bruce, you want to answer this?
Well,
this is a tough question. Super tough question.
Yeah. I think we can't we do not have US person due to this tax issues right now. I think US persons have no access to this.
Yeah, this is quite similar.
Yeah, so maybe just to add on, I think if you are a US, I mean, when we open a brokerage account, they always ask us to declare, right? So I think there might be some declaration matters. Yeah, you probably need to check with the brokers, right?
Yes.
Okay, so let's move on to the next question. Right. Okay, Mr. Anonymous attendee, what's the objective definition for tech-related revenue of the index?
Yeah, I think Adrian already mentioned this in the index methodology. Here, we try to classify some of the key sectors related to technology, but it's not only limited to the pure IT or electronics. Why is the case? It's mainly because now, even for traditional industries like manufacturing or like retail names, they invest a lot in the technology related sectors to help them to grow their traditional business. That's why in most cases we use the fintech or we use the online app to buy the products we need. Or they increasingly using AI to guide their business. So that's why we trying to define the 40% related revenue to tech to include the relevant companies, or using the 50% threshold for those conglomerates which include multiple business or entities. So the whole purpose is that to link to the two major themes in the region, because when we talk about tech, there are two types. One is the hard tech, which means typically equivalent to those high-end manufacturing, or links at the technology related to the healthcare, which is obvious a trend in the region, and also benefiting from the relocation of the global tech giants supply chain. And the other part is about the soft tech, which is more links to the platform economies, such as the online apps, benefiting from the favorable demographics and the increasing spending power in the region. I think here is more about the ASEAN or India that tends to replicate what has happened in China over the past 10 to 20 years. But just as mentioned, Adrian mentioned in his slides, ASEAN now has a more population and a much younger population, which can capture. That's why we can capture those investment themes.
Thanks, Bruce, for the wonderful answer. Let's move on to the next question. All right, by Valerie again. When is the last day to apply for this ETF?
Okay, I hope Valerie has a pen with getting ready. So I just want through DBS will definitely close the last day on the 13th at 12 noon. Philip Securities will close on the 13th at 5 p.m. iFast will close on the 14th on 5 p.m. and Futu Mumu will close on the 14th 12 noon. So
okay, you got it.
Yeah, but I think the best is not to wait to the last day, right?
Yeah, makes sense.
Yes.
Yeah, so I think another word of advice, Valerie, if you're using one of the listed, I mean the many of the brokers that are participating in this distribution, maybe you can just check with your broker. Yeah, do a quick search as well. If you didn't manage to, hit pen down what Adrian said, or you can watch the replay on YouTube for this. Okay, thanks, Valerie. All right, next question by Vivek again.
Yep.
Can this ETF be bought through OCBC SRS?
Yes, but only on the 20th of June itself after listing, right? Yes.
Okay, thank you for the answer, Adrian.
Yep.
All right, so I've got another question from Mary. What is the average valuation of the stocks in this ETF, say in terms of price to revenue?
Yeah, there are a couple of valuation metrics. For example, PE, roughly 28 multiples for now, or PB, like 3 multiples for now. But it's worth noting that when we check the growth stocks, we must have a reasonable expectation that their valuation are typically higher than those those so-called value stocks, because their higher valuation are well compensated by their potential higher growth. For example, for the stocks in this index or in your portfolio, their EPS per share are expected to grow 20% plus per year in the next 2 years. So that's why even their PE or PB or other measures such as EV versus revenue looks higher than the traditional stocks. They still have a lot of potential to grow. And just echo my points in my slides, from a drawdown perspective, the current negative 25% drawdown is already close to historical low level, which is at 30%. So which means if we see a more favorable fundamental environment and also more favorable, let's say, interest rate environment in the second half, and if those technology leaders, their FX, I mean their foreign business outside Singapore, their foreign business, the foreign FX other than SGD can be less volatile or even appreciate on the back of the recovery, then obviously we still see a lot of potential for these ETFs price to go up further.
All right, thanks, Bruce. I hope Bruce answered your question. Mary, thank you for asking. Right. Okay. Mr. Anonymous Attendee. Sorry for my ignorance. This ETF is to follow the IH index from SGX. So it's a passive ETF. Or CSOP is the one to maintain the constituents. If this is passive, then the management fee seems to be pretty high. I don't know. Maybe you can shed light on this.
Yeah, sure. I would say yes, the ETF is tracking the IH Southeast Asia plus India Tech Index. So for the daily management, it's more or less a passive management. But when we design this index, the CSOP, both CSOP and the SGX are deeply involved in designing these dynamic index, which means the so-called active process already embedded in the index design and rebalanced on a quarterly basis, and we'll also include the how to say the upstarts or the sliding starts even right after the IPO stage for those certain stocks. That's why even we call them a passively managed ETF, there are still some active components reflect in the daily the quarterly rebalancing or the cases, the IPO cases between each rebalancing dates. And this is passive. The management fee seems to pretty high. I would say since it is a growth stock in the emerging markets, the current TER is quite in line with the global emerging equity peers. And even you talk about let's say 1% or 1% plus TER, but if you consider their potential capital gain, then obviously this is well compensated.
Thank you, Bruce, for shedding light on this answer. All right. Next question. Mr. Victor Xiao, is there any minimum sum to apply?
Yes, I think the most of the brokers did set a minimum of $1,000 just to make sense to everyone, and the subsequent incremental investment amount is actually 100. So invest a minimum 1,000, and then you can go to 1,100, 1,200. Yes.
All right. Thanks, Adrian. Hope this answers your question, Victor. So we probably have one last question from Vivek again, right? Will it only have listed companies or also some fast-growing and profitable unicorns and soonicorns from Indonesia and India?
Yeah, I would say that the index or the portfolio is designed to invest in listed company only, but investors can still have the access to so-called these fast-growing unicorns, soonicorns, because again, we have a fast entry rule to include those newly issued stocks right after their IPO if their market cap is ranked among top 10. And also for the existing listed companies we invest in, they can also invest in some projects or unlisted company which has a very strong potential in terms of growth. So investor can still access those in different ways.
Right. Thank you, Bruce. Hope that answered your question. Vivek, anybody have any more questions? Any more questions? Wow, we had quite a few questions on that. Okay, Mr. Anonymous Attendee, one question, right? When the index participate in IPOs that are deemed to be added into the index, would this addition be conducted at IPO price or at first day open price?
I don't think so. We still need to wait 10 days after IPO, but we will try to include them as soon as possible instead of waiting till the next quarter end.
Okay, thanks. Hope that answers your question, Mr. Anonymous Attendee. Anybody else has any questions? We're still taking questions. Calling once, calling twice. Okay, one more question for Mr. Vivek. Okay, I think probably he's not a question, right? Yeah. Do you want to take that?
Most tech companies are grossly overvalued. IPO stage tiger. Sorry, we cannot comment a single names here. But again, it really depends on market environment. If market environments favors the tech names, you obviously see a premium to IPO prices or a very strong price gain during the first day of the trading. But I think that's possible. But again, when we trade those names, whether during the IPO stage or after IPO stage, we have a advantage or edge to trade them in a very competitive way because we have a large scale and broad network with our existing brokers in the region. So which means we can take advantage of this to save some saving cost, regardless they trade a discount or at a premium. That's why we create an ETF to help investors access those names.
Yeah, I think very good answer to that question, Bruce. Right. So, and this is the ETF, right? So there's a element of diversification involved, of course. All right. So I think that's all for today, right? Any last words, Bruce and Adrian?
I'll let Bruce to go first.
Yeah, I think when we are investing in these tech-related stocks, we need to think about the macro perspective, but also pay more attention about the individual stocks' potential performance. Valuation is always important, but this is also part of these growth prospects because we also have the growth or earnings components in each stock's fundamentals. So I think since China now or is still a bit struggling to manage to recover to return to a full speed recovery, which also impacts the China's or Hong Kong's related investment themes. So we launched this ETF at this time. Is also trying to supplement or complement investors' existing investment portfolio because the Southeast Asia plus India region, they're subject to less sanction risk, but have a more policy advantage or better population structure and fast economic growth. So that's why we think there's still a lot of potential to invest in the so-called next China or invest in the ASEAN version or Indian version of the Nasdaq or the Hang Seng Tech.
I mean, Bruce, you took
you,
the words
Bruce.
out of my mouth. I mean, I think like using the index methodology that we as an ETF manager and to the investors is actually the purest and most transparent way. You know what you're investing into. These are technology companies, 30 largest companies within the region in Southeast Asia, and in India itself, we have very transparent methodology, right? We have to look at the revenue of these companies. Are they hitting a threshold? Are they making money already? Are they products in the market, right? And of course, the most unique selling point is actually the fast entry of that's being applied to the index and to the ETF. The latest stocks as tech stocks within the region is being listed. So definitely we'll put it as soon as possible, giving investors that easy access to such growth stocks within the region via this ETF. And just to refresh the memories of this ETF, the name of the ETF is CSOP IH Southeast Asia plus India. This is plus the India tech index ETF. So SQU is the US dollars denominated and SQQ is the Sing dollars denominated.
All right, thank you, Adrian and Bruce, for your wonderful insights on these two regions. Right, so guys, if you like to look at the ETFs, just look up SQQ, SQU. All right, so I think we've come to the end of this webinar. Hope you guys had an enjoyable time. I learned something here, right? Thanks, Adrian and Bruce, once again. Right, everybody, have a great evening. We'll see you at the next one.
Thank you.
Thank
Thank
you.
you, everyone. Good evening.
Thank you.